can see the management is getting ready. Shankar Raman is about to speak. Not yet started, of course, but it will be interesting the analysis that comes out, or maybe there will be some explanation in terms of what's happened to the hydrocarbon business. So just to reiterate, let's go through the numbers one more time. Clearly, the silver lining for L&T this quarter has been the margin performance, because the expectation was that the margins would not be great, but that's not happened. By the way, let's just cut across to the management.
Well, as you've seen from the results, we've done well as in these circumstances as one would expect, and some of the vision and plans that we had of going international has really helped us to maintain our order booking, and we also put in a lot of effort on execution. And I think as we go forward again, it's going to be the execution part that and cost reduction, working capital management, that will be our major thrust areas, as we have a fairly good order backlog to execute. So I think we are still going to have a difficult period as far as the economy is concerned in India, but I think immediate concern would be to continue our impetus on order booking on international jobs and give more focus to strengthening our organization internationally, and also to focus on execution and operational excellence. So with these words, I will request Rajaram to take this forward, and we'll be very happy to answer your questions at the end.
Shankar Raman, sir, not Rajaram.
Sorry, Shankar Raman, my apologies. I mean, that's just, no, one way, the slip of the tongue is not an error of the mind.
Good afternoon to all of you, ladies and gentlemen. Thank you for taking time to be here in the media presentation on our third quarter results for the year. The standard disclaimer on forward-looking statements in the course of this presentation and the interaction that is to follow. The most significant development during the quarter has been the completion of the demerger process of the hydrocarbon business that we set ourselves into. We received the court order confirming the demerger, and the same has been filed with the Register of Companies. So L&T Hydrocarbon Engineering is well and truly now on its way as a wholly owned subsidiary of L&T. The import of this development for the quarterly and the 9-monthly results of the current year is the results that are going to be seen by you would exclude the numbers of hydrocarbon, both in terms of the current year performance as well as the previous year's performance. So the necessary accounting restatements have been done, and you shall look at the numbers that have been presented to you as part of business and hydrocarbon. The highlights for the quarter 3 has been the significant and sustained improvement in the order procurement activity of the company. The fresh order inflows at 217 billion rupees has registered a growth of 21%. On a largish base, the company continues to procure orders, and that in a sense demonstrates the company's ability to make a differentiation to the customer, and L&T still matters to the customer when it comes to placement of project orders. The order book consequently has moved to 1,71,000 crores. It's a growth of 13% year on year. Not a small achievement in a year where to maintain order book, leave alone growth, is a challenge by itself. Sales at 144 billion has grown by 12%, and EBITDA margins have also increased by 186 basis points at 11.64% for the period ended December FY 2013-14. Profit after tax at 12.4 billion has registered a growth of 22% year on year. Looking at the order inflow, quarter 3 recorded an order inflow of 217 billion, as we just saw. It's a 21% growth over the 180 billion of the corresponding quarter of the previous year. On a cumulative basis of 9-monthly level, the order inflow is at 674 billion, a growth of 23% over the 549 billion that was in December of last year. Insofar as the order procurement is concerned, much of the order inflow has come in from the infrastructure segment, and the general weakness and the uncertainty of the macro environment and the policy constraints continue during this period, and it's most evident in sectors such as power, minerals, metals, construction equipment, etc. The international focus that the company brought to play has paid dividends, and consequently we find almost 30% of the orders that we have procured for the 9-month period is from international markets. The order book, as you can see, at 1,71,000 crores has registered a 13% growth, and roughly about 15% of this order book is from international projects orders. The order book gives a 3-time trailing 12-month multiple of the revenue, and that provides visibility of what the company's revenue could be over the next 2 to 3 years. The composition of the orders, as you can see from the charts, 70% of the orders is from domestic markets and 30% is from international markets, largely Middle East with some Far East orders as well. Sales at 83% is from the domestic market, 17% from international. This percentage of 17% has been by and large a similar level in the previous year as well. Possibly going forward in the subsequent years, you could find the mix of sales from international markets increasing as compared to domestic orders on the back of larger order intake that we have had from international markets in the current year. The order book is 85% domestic and 15% international. If you look at the profile of the customers who have placed these orders, nearly 60% of the orders have come from public sector companies. These are not necessarily governments, but it also includes the public sector undertakings and the equivalents in markets such as Middle East. Private sector has been generally shy of investment during this phase, and hence that's reflected by 38% of the order inflow coming in from private sector. There has not been much activity in the public-private partnership space, so consequently the orders that L&T procured from our concession business, IDPL, represents about 3%. The order book is divided with 46% from private sector customers, 43% from public, and all of the concession business put together, not only those which our subsidiary company IDPL has placed on us, but also the orders that other developers have placed on us, accounts for 11%. The performance summary indicates a 12% sales growth, as you can see, for the quarter 3 at 143 billion rupees, and for the 9-month period at 365 billion rupees, a growth of 9% over the previous year. International sales have grown by 11% in quarter 3 at 23.7 billion rupees, and for the 9-month period, international sales are at 61.6 billion rupees, a growth of 20%.